In a surprise move, the Reserve Bank of India has kept interest rates on hold. It's also lowered its economic outlook. The benchmark rate will remain at 5.15%. The move marks a pause in a steep rate cut cycle that saw the central bank slash rates 5 times in a row this year. The RBI said it made the move due to near-term inflation concerns. India has been battling a domestic slowdown with 6 consecutive quarters of declining growth that's now at a 6-year low. The RBI also dropped their forecast for GDP growth from 6.1% to 5% for the year ending March 2020, marking the weakest expansion in years. In reaction to the news, both the Nifty and Sensex dropped on the news and ended the day in the red, as you can see. Now, the Indian rupee also slipped against the greenback, now trading down 0.28%. Radhika Bajaj has more on the RBI decision from Mumbai.
It certainly is a surprise move because economists we've been speaking to were expecting at least a 25 basis point cut of the repo rate, which is the rate at which the RBI lends to commercial banks. But for now, it seems that the RBI has thought that there is room for future maneuvering, and they've left the rate unchanged at the moment. The RBI in its statement has also said that they're already looking at some green shoots emerging. I'm guessing that they're referring to data from GST collections, which saw an uptick in November. The other major factor was inflation, because we saw that sort of surpassing the RBI's medium-term target of 4% in November. The other problem that the RBI was facing was that even though cumulative 135 basis point cuts were seen since February this year, the transmission of those cuts hadn't really happened. So it's not like credit was growing or had become cheaper for the end borrower. Those seem to be some of the factors that the RBI has kept in mind, and for the moment they have said that there isn't going to be a change of a rate in the repo rate.